here's my candidate for rising interest rates and likely to do well as a result for what it's worth. Over the other side of the pond is Wells Fargo. This is one we don't talk about very often, but rising interest rates, I think, leave them quite nicely placed here. So banks in general, their kind of core operations, leave aside the kind of trading and investment banking stuff, do better when rates are higher. So the way they want to make their money is by lending you money at one rate and borrowing it off you by form of deposits and so on at a different rate, a lower rate, more or less. And their money is going to be the gap between the interest they get on stuff like mortgages and the interest they pay on stuff like savings accounts or whatever. So Wells Fargo is basically a specialist in this kind of core banking activity, and I think they can do well here as interest rates come higher. They're falling along with a lot of the US market, and they're starting to get to a level that I think might be kind of interesting. The reason we've not had any interest in them in the last couple of years is, well, after people said their dividend was safe, it turned out it really wasn't. They got whacked by an asset cap after some pretty major fraud there. They now have a decent amount of regulatory requirement to deal with, and it's going to be a little while until they kind of get anywhere near having completed that. But once they get out from under their asset cap, and they've been making slow progress getting out from under that asset cap, it looks to me like this stock looks cheap after they can kind of get clear of it. With a turnaround, you don't want to kind of be too early on this. One of the issues I have around Intel, which is now in the mid-20s from what I can see of it, is it's a turnaround story, but it looks like it's at the start of the turning around rather than sort of towards the end of the turning around, which means that you're going to have to sit around for a few years until it really kind of turns itself about. I have no doubt it will in the end, but I would need a clearer picture of how that turnaround is going to look. Wells, I think, is further down the pipe on this one, and I think that higher interest rates will be kind of helpful to them, even with kind of limited assets. I think they stand to do better. Why them and not sort of JP Morgan or Bank of America? They're probably a worse outfit than those, but I think they're priced better and they're pure focus, and they have better interest rate exposure than either of the two who are also trading operations. So yeah, Wells Fargo is my one that I'm kind of keeping an eye on. It's US based, of course. Steve, that put you off?
Only slightly. I think there's still bargains to be had in America at the moment, but it's just that exchange rate at the moment feels so alien to be wanting to go and buy something when the exchange rate is, under 110 feels quite tricky at the moment. But Wells Fargo, as you correctly say, is a bit more of a easy to understand bank, I guess, is my favourite way to put it. It doesn't often get terribly involved in IPOs and investments and things like that. It's more of a, I guess it's more of a consumer focused bank with some additional corporate lending, which makes it very easy to understand. I think it's primarily one of the reasons that Buffett owned it, is that for quite a long period of time he understood that exactly how it worked. I remember there's quite a few comments about him reading through American banks saying, how can you value something like this? There is either no value or some value, and you cannot actually pinpoint what is the correct answer at that time. So I guess it's why you like Wells Fargo. Are they allowed to buy back stock at the moment, Steve? Are they doing that?
I'm not sure at the moment. I think they might be, or at least allowed to for the time being. I think we're in the business of pushing their dividend last I saw, which has now reached about 3%, which is close to parity with something like JP Morgan and I think higher than Bank of America, for what it's worth. So the kind of real attraction, I guess, of some of these big financials is, as you say, they have strong capital return programs and they're easy enough to understand. It has a big installed base, and its idea is to basically pay out dividends and buy back shares, and your increased interest in the company goes up as you go along. If they're not, that presumably only means that they're keeping cash on the sidelines and ready to go when the time comes.
Is it Wells Fargo over JP Morgan, or is it both at the moment?
Gosh, that's tough to say, isn't it? JP Morgan, as you say, is more complicated, and it might be better value at this stage. JP Morgan at close to 100. I was working out which of these to put down. I could have put down either, to be honest. JP Morgan at 105 I've written down as something I could have said I thought looked attractive, but for them, ask me when I've got the actual money to do something here, and I'll see what mood I'm in. What else you got in your list?
All theoretical. I actually bought some JP Morgan at 112. I've been buying it at 105 as well, and I think it got close to 100 a couple of times. I only got a really small handful. It's just been loose change purchases. I think I've got a total of 3 shares or 5 shares, but it does look very attractive to me as well.